Hello guys and welcome to another Contrarian Goldmine episode. Today we'll do a stock analysis on a company that is trading near their 52-week lows. It's not been easy to find companies or great companies trading at their 52-week lows, but the company I will bring you today is Hershey Company. Hershey is one of the largest chocolate manufacturers in the world. They manufacture as well baked products such as cookies and cakes, and they sell beverages like milkshakes. Hershey's is one of the biggest in this industry. Their market cap is around $40 billion. They are trading at a P of 23, but their forward P is around 19, which is really low for a company like Hershey. If you follow this company, they usually trade around the 30 P because it's a really great company, a high quality company who has really great margins, have high returns on invested capital, and nevertheless they are having some difficulties, or at least they are not having difficulties because business is running smoothly, but there are some risks that I have to warn you. Investors are afraid of, like competition, especially from Mr. Beast Feastables. Feastables is growing a lot. We don't know if they are taking market share from Hershey's, but growing at this pace, it might revenues from Hershey's might take a hit. We don't know. That's one of the risks, and that's why Hershey's is trading at a lower valuation and at a 52-week low. I mean, but is this an opportunity? I don't know. I like to invest in companies having difficulties, but where these difficulties are solvable or are not really a problem, but in the pendulum of valuations at the moment, it could be trading there under their fair price. But what is the fair price or the intrinsic value of this company, we will find out next. But this is a company not growing fast. It is a really stable company. Their growth is around 7-8% per year. They have 45% gross margin, and their net margin are around 17%, which is really high for a company who sells this type of product. When you look into the competition, they don't have these margins. Their balance sheet is not excellent, but it is pretty good. They have a long-term debt of 4 billion. They could pay their long-term debt in 2 or 3 years of free cash flow, which is not bad for a company who has a lot of infrastructure like Hershey's. Their returns on equity are above 50%. It is really good. Their return on invested capital, and it's been around 22 and 22%, which is really high. I do really love this. They are paying a dividend yielding 2.36% at the moment, and their payout is under 50%, which we really like to see. But looking at the fundamentals, it's all check marks on our manage on the checklist. They are growing. They have really good margins. Their debt is manageable. They could pay all of their debt with 2-3 years of their free cash flow. They have high returns on invested capital. They have a wide moat, but this moat is maybe taking a hit. We don't know. That's the difficulty of investing in this business. Personally, I'm afraid I don't own this company. I would love to own this company, but I'm afraid, and I don't know if the valuation is or the fair value of this company, what it is. We'll find next. But this is a company I want to buy cheaper. I do believe they deserve a premium, but with this competition, their premium might go lower. But we'll see. They have been free cash flow positive, returning capital, doing buybacks and dividends, both, which is really good. Looking at analysts, we have to look into valuation now. I've done my discounted cash flow. My assumption for this company is them to grow around 8 to 5%. I do believe they deserve a premium. I assume 18 PE. My discount rate for this company is, I will assume a lower because this is a really stable company. I'm happy to own this company using a discount rate of 10%. Then margins, I'm expecting them to have margins of 16%. It could be higher. They could increase margins in the future, but with this competition, I want to be a little bit conservative. And I've done my bull case and bear case. and I come with an intrinsic value for this company of $144. At the moment, they are trading at a price of 192. They just hit 52-week lows around $180, but this is still far away from my intrinsic value. I do believe this is trading at a lower valuation that it usually trades. Based on that, Hershey's might be cheap, but looking at value evaluation, it doesn't look as cheap as it looks before. So since they might or they will face a lot of competition, I would like to buy this company around their fair value. I do know that it is difficult to buy companies at their fair value, especially high quality companies like Hershey's, which is an established brand that is still growing. And but in my opinion, I would be expecting them to go lower if I want to buy this company. Valuation doesn't make sense for me, even though it could be a really opportunity. It could be the lower and they could continue to grow. Festivals could not take it and actually can be good for Hershey's. That might be another public trying to buy chocolates and buying new Hershey's product, for example. It might be a really good advertising for Hershey actually, but that is a bull case that most of investors doesn't believe on that. But that is just my opinion. Hershey's investors are not bullish on this company because of competition, but they are trading at a lower valuation when you compare to the last few years. But valuation wise, for me, when I do my discounted cash flow, this is not the best price or the price I want for Hershey's and for me to be happy to buy. So this is my opinion, guys. That it is. We have Hershey's, one really great company, really good fundamentals, high returns on invested capital, high margins, a really good business. But at the moment they are facing, investors are afraid of competition, and that might be an opportunity. Valuation wise, for us, doesn't make sense when we do our discounted cash flow. I would like to buy this company cheaper, but when you look into PE and compare to past history of the company, Hershey's never been so cheap. But for us, I'm happy to hold and wait for a better entry point. And I hope you find this video useful valuation wise. This is my opinion, guys. This is just my assumption. Your price could be different, and this might be the bottom for Hershey's, and the company can do great in the future and the stock price goes up. We don't know, but for me, I would like to buy this company even cheaper. So that is Hershey's. I hope you find this video insightful, and if you liked it, please like and subscribe. See you next time, guys.